Hey everyone, and welcome back. Ever wondered what's happening in one of Asia's most dynamic economies? Imagine a stock market index that's practically hitting all-time highs, showing consistent gains, and acting as a major indicator of its nation's economic health. Sounds pretty impressive, right? Well, that's exactly what's happening with Singapore's very own Straits Times Index, or STI. Today, we are diving deep into what makes the STI tick, why it's performing so incredibly strongly, and what the future holds for this economic powerhouse. So, first things first, what is the STI? Think of it as Singapore's main economic report card. It's meticulously designed to track the performance of the top 30 biggest companies listed on the Singapore Exchange. So, when the STI goes up, it generally means these big, foundational businesses are thriving, signaling strong economic health and confidence in Singapore's strategic direction. And right now, that report card is looking stellar. As of mid-July 2025, the STI is chilling at 4,161.43 Singapore dollars, just a hair below its historical all-time peak of 4,191.54 SGD, which was also recorded in July 2025. This isn't just a fluke. It's been on an incredible run, climbing for 9 straight sessions and recently smashing through the psychological 4,000-point mark for the first time. This points to serious investor confidence and a super resilient market. We are talking about year-to-date gains of nearly 10% as of July 10, 2025, and a whopping 20.12% jump over the past year. These gains aren't just in one area, they're broad-based, spanning key sectors like banking, real estate, and transport. So, what's fueling this impressive surge? It's not just one thing, but a strategic, multi-pronged approach that makes Singapore a global economic powerhouse. Let's break down the key sectors driving this growth. If you haven't already subscribed to our channel, please subscribe to our channel. Your support truly makes a difference, enabling us to produce more stock and fundamental analysis content. But first, a quick disclaimer. Please note that the content presented in this video is for informational purposes only and does not constitute investment advice. We strongly recommend that you seek proper guidance from a qualified financial advisor before making any investment decisions. First up, financial services. Singapore is becoming an absolute magnet for wealth, poised for substantial expansion. We are talking about household net assets potentially doubling from $2.3 trillion to $4 trillion by 2030. This isn't accidental. It's part of Singapore's deliberate strategy to be Asia's leading global financial hub, attracting talent and businesses with its well-known public safety, educated workforce, and awesome free trade agreements. Major Singaporean banks like DBS, OCBC, and UOB have been reporting fantastic earnings. Plus, they're embracing cutting-edge tech like blockchain to make payments faster and enhance cross-border transparency. OCBC Bank is even adopting generative AI for customer service and investment management. In fact, institutions like Morgan Stanley even predicting Singapore's entire equity market could double in value over the next 5 years. Now that's confidence. Next, real estate. Singapore's property market is buzzing. There's a persistent shortage of homes, but strong demand from local upgraders and international investors. Even with measures like the 60% additional buyer's stamp duty for foreign buyers on residential property, high-net-worth individuals are still pouring money into alternative property investments like commercial real estate and REITs because Singapore is seen as a super secure destination. Plus, with anticipated interest rate declines between 2025 and 2027, mortgages will get cheaper, encouraging more buyers. Experts like CBRE are forecasting another 3 to 4% increase in private home prices for 2025. This isn't a speculative bubble, it's controlled, sustainable growth, thanks to smart government policies designed for long-term stability. Then we have transport and logistics. Singapore is investing big, over $60 billion this decade, to expand and upgrade its public transport, especially the rail network. Think new MRT lines like the Cross Island Line. This huge, long-term infrastructure investment isn't just about moving people. It's a fundamental driver of economic growth, creating employment, boosting productivity, and cementing Singapore's role as a regional logistics and transport hub. And they're thinking green too, aiming for 100% cleaner energy vehicles by 2040. This sector is quite literally building the future. Let's talk retail. Shopping in Singapore is evolving fast. Everyone's into omnichannel retail, seamlessly blending online and in-store shopping, with expenditure projected to surge by 21.2% by 2026. Retailers are getting smart, leveraging AI-powered solutions to personalize experiences and boost sales. And with the continued recovery of the tourism sector, more visitors mean more spending, further boosting retail and F&B sales. It's all about unique, eco-friendly, and immersive shopping experiences now. Finally, telecommunications. This isn't just about phone calls anymore. It's about building the digital backbone of the nation. 5G adoption is booming, expected to surpass 4G in 2025 and account for an impressive 90% of total mobile subscriptions by 2029. Companies like Singtel are making huge strides in data centers and AI services, even partnering with giants like Nvidia to offer GPU as a service. Their digital services arm, NCS, is also growing rapidly, supporting digital government portfolios. This sector is literally powering the digital economy, with Singtel expecting its core business value to jump by a massive 300% over the next 12 months. Of course, no journey is without its bumps. While Singapore's economy saw stronger than expected GDP growth of 4.3% in Q2 2025, partly due to businesses front-loading sales ahead of US tariffs, there are headwinds. Global trade tensions, especially US tariffs, could temper economic growth, particularly in export-focused sectors, with their full adverse impact specifically projected to be displayed in 2026. The IMF even projects a slowdown to 1.7% GDP growth for 2025 due to these persistent trade tensions. We also need to keep an eye on potential tightening of global financial conditions and some domestic vulnerabilities within Singapore's financial sector, like a relatively small number of highly leveraged corporates and households or exposures to commercial real estate. However, here's the crucial part. Singapore's central bank, the Monetary Authority of Singapore, MAS, is super proactive. They've eased policy twice in 2025 to cushion the economy. The nation's robust policy framework, including MAS's proactive monetary easing and the government's ample fiscal space, serves as a significant mitigating factor. Singapore's banks are well capitalized, and they do extensive stress testing and contingency planning. So, while risks exist, they're being actively managed, providing a strong layer of stability. So, what's the big picture for the Straits Times Index? It's currently at near record highs, not by accident, but because Singapore has a smart, multifaceted national strategy. It's leveraging its unique position as a global hub, investing heavily in future-proof infrastructure and technology, and maintaining a proactive regulatory environment. The long-term outlook for the STI is definitely positive, with analysts like Morgan Stanley Research seeing potential for the market to double in value over the next 5 years. Singapore's perceived safe haven appeal amidst global uncertainties and strong company earnings are big drivers. While we might see some short-term volatility as the market is considered overbought, Singapore's underlying strength and strategic adaptability are key to its sustained economic vitality. It's a testament to how strategic planning and resilience can drive sustained economic vitality, even in a complex global landscape. What do you think about Singapore's approach? Do you see the STI continuing its upward climb? Let us know in the comments below. If you found this video insightful, please give it a thumbs up and subscribe to our channel for more deep dives into global markets.